Welcome back. Coming up on today's program, preparing for tax season? Want a bigger refund? Watch this. Taxes. Hey, it's like rotating tires, flossing, flipping your mattress, changing air filters. But today we're going to give you 5 simple sets of tips to help you get bigger refunds, prepare for the tax season with style, where to find help, getting ready, tax changes and tax basics, as well as working with the IRS. Welcome to What's Next with Money, a program that holds a promise of second chances, strategies for growth, and financial empowerment with smart insights to guide your financial decisions. Let's get started. Number 1, tax preparation help. Where to go and what to do. You can do it yourself using up-to-date computer programs like TurboTax and Tax Cut, Tax Aid, and so many others. They're helpful, but some have used in the past built-in video tutorials inside the program to give you context. When I started using these, that was very helpful for me. It really gave me an edge. But now a lot of those videos are on our good friends over at YouTube. So you can check out the YouTube channels associated with these various programs. Because without a basic understanding, some tax items, if you're doing it yourself, can get lost. Now, these programs also have the convenience of allowing you to do a state return with the data you've already put in. And you can even add another return from another state if you have business in 2 states. And I've done both. A good way to start is actually doing your kids' returns. It gives you confidence and practice on these platforms. Now, if you have more complicated tax matters, go to an enrolled agent or an EA. The EA designation shows the person has expertise in tax procedures and can represent you in an IRS audit. And it's really good for complex tax matters. A CPA, a certified public accountant, certainly can do taxes, meet with the IRS, and can help you with accounting and related business and some financial planning issues depending on the focus of their practice. Now, our friends, the CFP Certified Financial Planner Certificate friends, and other financial advisors may do some tax work and can provide tax advice and context depending on the complexity of your financial situation. And certainly they know the interplay of taxes with retirement planning, investment, asset allocation, etc. Now, if you have big or infrequent transactions or taxable events, you really should seek outside advice really beyond what's contained in some of these do-it-yourself programs. Even buying an hour or 2 of an expert's time can help you execute your taxes properly and avoid big mistakes. For those of us that need help with community-based tax preparation with less complicated situations, here are 3 great recommendations, and I'm going to have more detail of these in the comments section. The first is the AARP Foundation. They have tax aid for the elderly. And then you may have heard of something called VITA sites. That stands for Volunteer Income Tax Assistance. We'll have the 800 number there. Now, those sites have had challenges in delivering some of their expertise because of COVID, so please check in and see what their procedures are. And did you know that the IRS actually has free online tax software for any family or individual with an adjusted gross income under $72,000? Number 2, let's talk about getting ready, prepping for your tax preparation. And here, this is just part of my tax file from last year. I've got a small business, and I think I have a file that's probably twice this size, plus personal items. But I'm a little old school and I like paper. Anyway, you need to have last year's returns, records and statements and receipts from charities, interest payments that you've made for your home or rental property, mortgage, a lot of information about rental expenses, home improvement records, W-2s, information on your last tax refund, 1099 statements for retirement, Social Security, investment interest, dividends, capital gains, and miscellaneous income. And health savings accounts, you're going to receive a 1099 form for those, covered in a separate video that we have a link to. Now, bank and investment records and statements that are often online, or maybe you still receive them in print form, they're a great double check for tax preference items. And a big place to find possible tax deductible clues are with credit card statements, even check registers. So these documents and records are your defense, our defense, in audits, and can help you save money through legitimate tax deductions and credits. So what I do, I keep a file certainly for the past year, and as soon as the new year rolls around, I create a new file just to start dumping those receipts and statements. And we do a lot of charitable things, even to Goodwill, the ARC, etc. And so those go in there, but you have to keep those years separate. You also might consider writing down a list of tax questions or issues or things you might be confused about throughout the year, where you can get professional advice or seek answers to those questions through the software programs or some of the great IRS publications that are all available online. Let's talk about number 3, tax return basics. Now, you might get frustrated with taxes and memorialize in plastic one of your final forms. You just say, this is what I do every year. I get frustrated. But the basics are good to understand. And let me spell some of those out for you. They're real simple. Tax deductions. These are deductions that reduce your taxable income by a percentage of your highest tax bracket. You may have heard of tax credit. Now, tax credits are like tax gold. Tax credits are considered to be better than tax deductions because the tax credits directly reduce the amount of tax you owe to the government. We've often heard about personal exemptions. A personal exemption is the amount that the IRS excludes from your income for each taxpayer. Each taxpayer gets one of these, but also for those in your household and for most dependents. We talk a lot about, on What's Next with Money, tax deferral, because we have a big focus on investing for ownership. This is where taxpayers get to delay paying taxes to some point in the future. There are a few cases where you might be able to actually do that indefinitely, but sometimes you're likely to, you have to pay taxes eventually, and certainly your heirs do, but that you could be taxed at a lower rate in the future. And this applies a lot to IRAs. There's certainly tax deferral and significant tax deferral built in with Roths and in some cases 401ks. But this allows that compounding effect to be unimpeded by taxes. So W-4s and the idea of withholding, a huge issue. You know, our friends at the IRS, like Uncle Sam here, they like the money to come in periodically. They don't want you to wait and write one big check to them or do one withholding activity at the end of the year. They need, like all businesses, they want cash flow. They want that flowing in. And we get, as taxpayers, penalized for not keeping that flow steadily. So adjusting your withholding on a W-4 where you work, and you may have more than one job, is one way to do it. But if you're involved as a gig worker or you're retired or own a small business, you're likely to pay self-employment taxes and estimated taxes. So those periodic payments have to flow in. Here's another big one. Standard deduction. Now, we've had some recent tax reform changes that actually de facto became tax simplification because the standard deduction for most people has been raised, and it's now claimed by the majority of Americans, and it makes tax itemization less common. Now, there is a way around this. If you are charitably inclined or have periodic major health expenditures in one year, you might be able to bunch those expenditures in, let's say, every other year and consolidate them. And this allows you to possibly meet the threshold for itemization and save on your taxes. But right now, the standard deduction is very, very high and large, And that, in essence, becomes a tax simplification move by the government. What about Social Security? It is taxed in many cases to a certain percentage based on income and age. Unemployment benefits, they're taxed for the most part, but there are some exemptions that exist. And here's one of the most famous tax credits around. It's called the Earned Income Tax Credit, or EITC. And this is one of the genius moves by the federal government to help support low and moderate income workers and their families get tax breaks. It rewards and incentivizes and helps support and uplift the power of work and employment. Now, if you qualify, you can use that credit to reduce the taxes you owe. This is a refundable tax credit, and it certainly may increase your refund. But now, with a lot of these new income supports, the government likes to spread out the support through the year instead of one lump sum or one event at tax return, tax filing time. Now, there are 7 states that do not have a state income tax. They certainly make it up for it in other taxes, and here is a list of those 7. Now, we have a question of the day. We'd love your comment. How do you use, or how do you manage or think about a tax refund? Now, I've done some financial education work when I did work with the National Endowment for Financial Education with the IRS. We actually partnered with them to focus on the advantages of the tax refund as a financial event in everyone's life each year. There's so many things you can do with it. You can save part of it, you can invest, you can pay down debt, spend it to celebrate that you actually got through another tax year. You can use it as a planning tool, and the IRS allows refunds to actually be split. You could take part of it, or you could, through the Treasury Department, purchase savings bonds or I bonds, and these are tax advantage. They often pay much higher interest rates than savings accounts. So what's your advice or experience regarding tax refunds? That would be another great thing in the comments section. Now we're moving to number 4, finding out about tax changes each year. And to me, I think this is one of the most important sets of tips that we have for you today, because knowing what changes each year, and sometimes the changes are very small, gives you a sense of understanding and to see if some of those changes are good for you or your family as you do tax preparation. So, a thing to keep in mind, and this has happened very recently, Congress can be very active and they can do last-minute tax changes, and it might take the IRS extra administrative and programming time to reset their computers to implement them. You need to be patient, and this might mean delaying the ability to early file until all the new tax changes are settled. And here's some examples of some of the recent ones. There have been, in a separate bill, retirement changes on required minimum distributions. Those are now at age 72. They used to be a couple years before that. Now, tax rate changes can change periodically. One thing to help understand is you have tax rates at ordinary income, but then you have capital gains rates that if you hold an asset like a stock or a mutual fund or a piece of real estate, if you hold it at least a year and then sell it, you qualify for a lower tax rate on those, especially from taxable accounts. Child tax credit changes are huge. These have recently been converted to monthly payments instead of lump sum, and we're going to again see more of these kind of spread out social insurance type income supports for American families in the future. But there are a lot of changes in that particular area. We've seen a lot of tax issues arise related to stimulus payments from the pandemic, and big changes in inherited contributory IRAs, even rollover IRAs, if they go to non-spouses or children. Now, the rules vary, but a new theme here is that it's likely those non-spouses or children are going to take the money out of that IRA within 10 years in most cases, not all. Now, if a spouse inherits that IRA, they have their lifetime to manage that as well. Now, charity. We've talked about the standard deduction being raised, and most people really are taking that. But this past tax year, 2021, the IRS allowed individuals to deduct $300 in charitable gifts, $600 for a marital couple without itemizing. And that incentive for charitable intent may move to other tax years in the future, but watch again for those tax changes. A lot of tax rates and limits are inflation indexed. So they might change as inflation moves up, but it doesn't happen in every year. It could happen in different years. So that's one of those things about changes from year to year to understand. Also, income phase outs for tax preference items for higher income earners. This is sort of like a form of means testing that's already introduced into the tax code. And before we get to our final tip area, working with the IRS, make sure here at What's Next with Money, hit that like and subscribe button. This helps move our content to more people and refer some of these videos to others who will benefit from them. It's free, and you're going to get a little reminder along the way. Number 5, working with the IRS. Now here's Uncle Sam, and you know, taxes are a big thing. And let's see if we can get this little guy to work here. And you know, they used to have this fake form that says, simple new IRS form, insert income, and then insert payment, and basically it's the same amount to all your income go to the Uncle Sam. Let's see what he does here, if we can get this guy to move. Ah! Well, there's a nickel to the IRS. Now, working with the IRS, it's had major impact from COVID. The IRS is not answering their phones. Only a few get in. I've actually tried to call, and some have waited hours and hours to communicate with them during this pandemic time. Many of the professionals at the IRS are working remotely, and in many cases, returns were stored in the trailers of tractor-trailer trucks for weeks and longer. And they're still trying to work through that backlog. The best way to interact with them is through the mail. There's also tax hotlines, the YouTube videos I mentioned from the tax software providers. The IRS has fantastic, very readable information for basics, but it can get complicated at irs.gov. And let's say you're in a real tax jam. You cannot pay or pay all that you owe. There are different approaches here. You can pay. People encourage you to pay what you can and let the IRS in a written statement know what you're doing. You could set up a payment plan with the IRS, and you'll probably have to do that through correspondence. You can do something called an offer in compromise. This is basically a way to settle the tax debt without paying back the whole debt. Again, I don't have experience in this area, but these are proven kind of methods of working with the IRS in the collections area. There's also a category called currently not collectible, and that may be from a natural disaster, some big health crisis, but you would have to work that out, and basically you're kind of on a holding pattern, and the IRS cannot initiate collections toward you, but later, you know, you're probably going to have to pay or settle in some way. Now, what are taxes for? You know, they're the revenues and the income to run the government. It's programs and to pay interest on our large national debt. But it's also something else. It's behavioral incentives and legislative compromise. The behavioral incentives are to incentivize us through taxation, through breaks like health savings accounts and the earned income tax credit, to save for health care, to work, and to save for retirement. But it's also legislative compromise. Hey, it's political, and it's heavily lobbied. And a great senator from Louisiana used to have this little phrase. He said, and he wrote tax legislation, "Don't tax me, don't tax thee, tax that fella behind the tree." That was Russell Long of Louisiana. So be sure to hit that subscribe and like button, and don't forget to share. Remember, new episodes of What's Next with Money are posted on Thursdays.